everyone to this panel on impact investments. I think we've had a nice introduction by Mr. Khan from Canada and CNN talking about engagement, talking about the focus on people and value creation. In essence, impact investment is also about value creation and looking on the impact it has on environment, social goals, the SDGs that have been developed by the UN. So this panel is sort of an extension of what he has talked about. ESG investments on environmental and social goals have grown tremendously over the last couple of years. From numbers are grown by 37% in 2017 to more than 450 billion. So it's a huge market. It has attracted a lot of attention from institutional investors, from society as a whole, from international organizations. So we're going to dig a little deeper here in this session about the true value and the future of these types of investments. And we have an excellent panel here. I'd like to briefly introduce them by name and their organization, and they will have time with a few sentences to introduce their organization and what they do, and then we will move on to the questions. In terms of logistics, we have about 45 to 50 minutes. We will have 10 to 15 minutes at the end for the audience to ask questions. So please, if you come up with questions, we will have time for that at the end. So let's move forward. To my left is Jean-Philippe de Schrevel. He's founder and managing partner of Bamboo Capital Partners in Switzerland. And then on next to that is Mr. Fahad Bouchagar. He's head of investment of Invest Bahrain. And then we have Sandil Sungu, who's the executive chairman of Sungu Investments in South Africa. Next to that is Tushar Singhvi. He's the director of CE Ventures in the UAE. And replacing Mr. Abhishek Sharma is Ms. Shainoor Khoja. She's from Foundation Holdings in the UAE as well. So welcome, panel, and I would like to start with the first question to my left to Jean-Philippe. Briefly, just introduce your organization, as I mentioned, and please address the following question: What are the trends that you see these days in impact investing? So please go ahead.
Thank you, and good morning, everybody. So I'm the founder of Bamboo Capital Partners. We're an asset management company specialized in impact investing in emerging markets. And we have a global presence with offices in Colombia, in Kenya, in Singapore, and Switzerland and Luxembourg. We do private debt, private equity, and we seek to generate impact through our investments. We believe in for-profit investments, but with impact. We see now a convergence of trends happening in the world of impact investing. Number one, an amazing interest from private investors, institutional investors, and public investors for impact investing. 20 years ago, that was not the case. Today, it seems that the whole range of investors is being intrigued by impact investing, and that's very good. In the past, we were talking about responsible investment by screening out things you would not want to see in your portfolios. Then it moved to ESG investments, and now you're into impact investment that is really intentionally investing for change. So big needs, increasing interest. What we see also is, and we just discussed about this for 15 minutes now in the introduction, is the enabling factor being an exponential growth of technology opportunities. And when you talk about impact investing and serving the masses of poor people, low-income people in emerging markets, two things are important. It's accessibility and affordability. And technology provides that today, which is very, very encouraging. And then number three, in terms of, you have the needs, you have the interest, you have the technology and the enabling factors. Now you need the tool to invest. And what we see emerging is an increasing interest for something that's called blended finance. Blended finance being a sophisticated term to actually say that in your investment vehicles, you can structure different tranches of risk rewards and risk returns. And that allows us to attract different types of capital into one single investment pool, some coming from, the public money, philanthropy, subsidized money, non-risk averse money, and then progressively as you go up in the tranches of your structure, you attract private and institutional investors looking for risk-adjusted market-based returns. And this blended finance approach allows us to satisfy all the needs for all those kinds of capital and at the same time push further the envelope of investing into frontier markets and risk-taking in earlier stage companies because of that structure. So just to give you a few examples, and I'll stop here, in just the past 18 months, Bamboo has signed management contracts with the International Fund for Agricultural Development, IFAD, to provide finance for smallholder farmers throughout Africa. We've signed a management contract on an impact fund for SMEs in least developed countries with the United Nations Capital Development Fund. International NGOs, such as CARE USA, has signed a contract with us now to partner on managing gender equality funds, impact funds throughout the planet. So this is a signal for us that there's an acceleration of investments for impact, an increased interest. There's an enabling environment now through technology, and those blended pools attract, and provoke or enable partnerships between types of capital that in the past would not work together. And that's fascinating. You can have the EU coming in a first-class tranche of a public fund, and then you can attract private and institutional investors in the same tranches. And you know what? With this money combined, you go and help thousands, hundreds of thousands of poor smallholder farmers in Africa. And that's fascinating. So I'll stop here, but thank you.
Thank you, Jean-Philippe. So I like the idea of having these partnerships that never evolved in the past, so that's something new that lead to great results, as you mentioned. I would like to go to Ms. Shainoor at the end. You represent the foundation holdings here in the UAE. Can you briefly also introduce your organization, and can you share with us some case studies, successful case studies? You mentioned triple bottom investments. Maybe that's something that you can briefly highlight to the audience as well. Thank you.
Thank you. Good morning, everyone. Foundation Holdings is actually a multi-family office based here in the UAE, and it specializes in investing in healthcare and education in the GCC and India, providing growth capital for impact at large scale, and working to bring these companies that we invest in to an IPO for exit and long-term sustainability. What does impact mean? Everyone says invest for impact. So let me give you an example. So when I say we invest in healthcare and education, if you look at the UAE market and you look at education, think of the pyramid of healthcare. At the top of the pyramid, there's lots of investment. There are lots of hospitals. You want cardiac bypass, kidney replacement, you can get it. When you look at the base of the pyramid, there is very little available because this segment of the population, I'm talking about blue-collar workers, taxi drivers, cleaners, maids, low-level workers, they cannot afford a lot of healthcare. So historically, there have been fragmented small clinics providing services to these individuals. And because they are small and they can only charge a little bit, they've been working on a model of what we call overutilization, which means you go in for a headache, instead of giving you a Panadol first, they'll do an X-ray, a blood test, a urine test, etc., because it's the only way that they could exist. So how does Foundation work? It looks at the system and it says, where does $1 that we put in create 5 in terms of impact? And so we looked at this segment and we saw the fact that the UAE government was bringing in mandatory insurance, which meant there was a way for these people to pay for treatment. And so we invested in this segment to build the largest value healthcare platform. So we have 60 facilities, clinics, laboratories, and pharmacies that do outpatient care for this base of the pyramid, which is about 4.5 million people in the UAE. And these individuals can come for care in an environment that they're familiar with and know and trust. And our first speaker just talked about those 7 traits that you need. What we do is we bring in data and technology so we can provide access, quality, and affordability, bring the price right down. Because we're working on economies of scale, we don't need to do overutilization because we can see more patients and still make the same amount of money. And then because every worker at the base of the pyramid has a mobile phone, we can be engaged with them, send them health promotion tips, send them tips about their prescription, etc., and keep that engagement going. And this is how we create the impact. So we're still making money for our investors and really very good returns. We're not asking them to take smaller returns, industry returns, and sometimes higher, but at the same time, their money is changing the lives of individuals. And I'll just put one last point here, that when we invest, we look at the ecosystem. So what I've described to you, there's the employee, there's the employer that employs these employees, there's the government, there's the insurer, and then there is the investor ourselves. We want to make money. The government wants good GDP, good investment, good reputation. We help them with that by providing the employer with a quality service for their employees, which helps their employees be more productive and happy at work. How does this help the insurer? If we keep our claims high, the insurer will be compelled to reject claims. And that means that then the employee gets fewer services. By keeping our treatments really tight and putting in processes that manage the care of these individuals, we ensure that all these people, all these stakeholders in the ecosystem are 100% aligned. And this is how we bring impactful change. Once you create change with a few enlightened employers, the market will lead this change, because who will you go to work for? Somebody that is caring for their employees or somebody that is not? Who will you buy from or contract with or partner with? Somebody that's reputable or not? And this is how we look at impact investing in a practical way.
Thank you, Shainoor. That is, I'm curious to know how the $1 to $5 sort of return on value creation would work and how you measure that. So perhaps if we do have time, very, very interesting. I'd like to move to Sandil from South Africa. You represent Sungu Investments. Can you also share with us some case studies that you've seen, some successful case studies and some changes that you've seen in impact investments, as we would call it?
Well, thank you. My company, Sungu Investments Company, is a family-owned business, which is like an investment holdings. We have interests in various sectors, such as mining. We mine coal and supply it to our utility in South Africa. We have mine dumps, which we are exploiting, which we bought from the likes of BHP Billiton for exports and for local thermal production. We have a joint venture on the gold front with some Chinese investors. We are in school books publishing. We are the largest South African-owned books publisher for primary education. We are also in property. We bought 25 properties spread across the country from one of the largest property loan stocks. We are also in gas distribution. We get gas from Sasol, which is coal to liquid fuels producer, and transfer that to industry who want to use it for their own processes or for heating. Those are just some of the sectors that we're exposed to. The impact investing in South Africa cannot be divorced from our evolution as a nation state. You will all remember that when there was on the eve of the genocide in Rwanda, South Africa was getting liberated after decades of apartheid and centuries of apartheid and colonialism, where what we inherited was a dispensation where economic power was firmly out of the hands of those who were in the majority. So the last 25 years has been focused on impact investing, which wants to bring those historically, politically marginalized people who are black in the majority into the mainstream of the economic activity. Because the future of our nation state is centered on that majority feeling this new democracy is working for them. So that is our posit around the issue of impact investing. How to bring those people into the mainstream economy, whilst at the same time we're not being oblivious to the need for the generic definition of impact investing for sustainability, using more renewables. That happens in any case. What you'll have seen the last 25 years are groupings which have really amassed enormous wealth through the painstaking process of capital generation and capital accumulation, which today have assets and exposure in pretty much the rest of the economy, from primary resources to agro-processing to services, financial services, education, healthcare, and so on and so forth, who are beginning to also invest in things like social housing, things like primary healthcare for the benefit of those who are in the lowest rungs of our society, whether they are black or white. These are organizations which today have massive influence and are leading players even in the areas of renewables. And I could talk about the Kagiso Trust Investments, which was founded by former political prisoners for the benefit of townships where blacks were confined to. This is a company which is now a giant with partnerships with multinational organizations in energy, infrastructure, telecoms, and so on. You have a company like Tebe Investments, which was founded by again a trust for the benefit of political prisoners and their homes and the families of detainees. It's now a large organization. It's invested in renewables. It's invested in healthcare, in insurance. You talk about the Women Development Bank. Talk about Women Investment Holdings. You talk about the Disability Empowerment Trust Holdings, which is for the benefit of people with disabilities. You have a number of these organizations who are now coming of age and are standing on their own. They've got capital, but not so much capital as to really conquer the world. And that's why they will be out there in the world looking for partners from wealthy nations to partner with them so that they can actually take advantage of main opportunities which are in South Africa and in the rest of the African continent and the rest of the developing communities of the world. So we are very pleased in South Africa that we are taking a very comprehensive approach towards this issue of social investing. That we're not narrowly looking at renewables, for example, but we're saying how do we make sure that the economy works for all of South Africa's people. And we think we're making meaningful change and having impact in that regard. Thank you.
Thank you, Sandil. Thank you for sharing these successful evolution of successful case studies in Africa. Fahad, you're the head of investment Innovest in Bahrain. What are some of the challenges you see ahead of social responsible investing and impact investments?
Thank you, Douglas. Well, we believe that the most challenging thing when it comes to SRI or coming to the impact investments is the common behavior of the practitioners. Now, when we say the common behavior of the practitioners, they are always focusing just on one strategy, which is the negative screening strategy, where you can find, let's say, a portfolio of investments, and they will just eliminate any investment related to, for example, tobacco, armory, alcohol, and they will invest in the remaining, which is related to the social responsible investments. Now, what is the alternative for such behavior, or to change this behavior from focusing on one strategy? Is to come up with, let's say, the investors themselves, they need to practice two new behaviors, which are the shareholders' advocacy and being a community investing. And these two, if you notice, they can, together they can compel to become the pillars of the social responsible investing. Because once you are focusing your behavior to be more proactive than passive, you will be also reaching projects or investments related to the ground and reality. An example, for example, if you are investing in healthcare, why you only just invest on the company, on the project company itself, and become only a passive shareholder, where other investors, they say, no, let's go, for example, to the far distance cities, outside the major cities. Let's create a construction company, for example, where we hire the people over there. So now you have created jobs. And there are many students, for example, from this far village who are studying medicine or studying nursery, and they are away from their families. Why don't you bring them back to work in this hospital? So here it comes, as I mentioned earlier, the behavior. The behavior is becoming a shareholder advocacy and a community investing shareholder.
Okay. Thank you, Fahad. I presume you're also looking for some guidelines or regulation in that field to counter those challenges, or is that something the industry would be moving towards?
Well, as my colleague mentioned, the partnership.
Please keep the microphone close.
As my colleague mentioned, the partnerships are very important and critique when it comes to this matter. And when we say partnership, I mean partnership between government, private sector, and the practitioners of the social responsible investing. These partnerships should start at the beginning with coming with, let's say, a questionnaire to cover the spectrum of the social responsible investing. Government, they can contribute for such partnership by directing the pension funds, for example, sovereign wealth funds. They should focus more on the social responsible investing. As we know, sovereign funds, pension funds, all of them, they are long-term investors. They are investors who are looking for predictable cash flow. And such projects, when it comes to hospitals, educations, these projects need a heavy capital investment. And to retain the capital investment or to generate returns, it will not happen within 1 to 3 years or 5 years. It will take more, maybe even 10 years. So having the 10 years, having the predictable cash flow, I think there's, let's say, the real sweeteners for sovereign wealth fund and pension funds. Talking also about the returns of such projects, they might not be within the benchmark of the investment spectrum, but I'm sure they're not too low. On the other hand, sovereign wealth fund, pension funds, usually they look for the 7%, 8% returns because they are more worried to protect their capital. So I believe that social responsible investment do generate such returns and even more.
Thank you, Fahad. Last speaker, Tushar, you are the Director of CE Ventures in the UAE here. Please briefly introduce how your organization plays a role in social responsible investing, but also are corporates really interested in these new hype of investment? I think we've seen over the last 20 or 30 years, I think the last sort of hype in social responsible investments was in the early 2000s, where many companies were publishing these social and environmental friendly annual reports. There was a lot of buzz and hype around it, but nothing really materialized yet. Or maybe the seeds of what is going on now were laid back in those 20 years ago. So is this really a hype that you see, or is it here to stay, or will this eventually fade away over time, or will it only increase over the next couple of years? Please.
Thank you. So Crescent Enterprises is a UAE-based diversified business group. We operate across 4 platforms. CE operates our operating businesses, and we have interests in ports and logistics. We run ports around the world, in 10 countries around the world. We have interests in power, healthcare, business aviation. We then have CE Invests, which is our later stage investing platform, predominantly into private equity and more mature businesses. We have CE Ventures, which is our corporate venture capital arm, where we're kind of capitalized it with $150 million to be invested in early stage tech-enabled startups. And then we have CE Creates, which is our in-house incubator, which is developing and building startups from within, sector agnostic, geographically agnostic, but really building businesses with a clear social purpose and which are socially responsible businesses. So, you know, social responsibility cuts across our platforms. ESG is embedded in all our operating businesses. We have been, measuring and ESG metrics across our businesses for the last decade. We have been publishing sustainability reports within our businesses and really tracking it in a very data-focused approach. And that cuts across operating businesses and our investments. To your question on whether this is just hype or corporates are really compelled to do it, I think it boils down and goes back to, the one core driving value that we have that drives us to invest in a socially responsible way is you can do well while you can do good while doing well. And it has, I think, been proven. There are a lot of research, and it's empirically proven that investing and operating in a socially responsible way does drive higher returns and a higher return on investment. And if you look at what is driving this change, on the environmental side, of course, climate change after the 2015 Paris Climate Accord, it's become the top issue across businesses, across boards around the world. But the real driving force, in my view, is the changing consumer, the more evolved consumer, the millennial. Today, every week you have about 1 million millennials replacing the baby boomers in the workforce. And this is an emerging consumer who he or she is more aware. They want to make purchasing decisions and buy products from companies who actually share that social purpose. And it's a tremendous force. Millennials have already, I mean, the spending power of millennials is about $10 trillion today. And there's research to show that about $15 to $20 trillion will be spent through ESG, through SRI strategies going forward. And the thing is, you cannot ignore one. There's a myth that millennials really don't care. But again, there's a Morgan Stanley report which shows that 82% of high net worth millennials are interested in SRI approaches as compared to 45% across age groups, which does show that millennials are more aware, they do care about who they're buying from and what kind of companies and brands they want to associate themselves with. To give you an example, and obviously investing across healthcare and education and building the social infrastructure is extremely important, but how startups can also create huge impact and impact investments flowing into startups. So from our corporate venture capital platform from CE Ventures, we invested in an Indian company which is now India's largest fish and meat e-commerce company. But beyond the fresh fish and antibiotic-free fish that they do deliver to consumers, they have a very robust procurement system. And what they essentially did is disintermediate the supply chain going right directly to the fishermen at harbors. And effectively, what that's done is increased the selling price for about 100,000 fishermen across 1,000 coasts in the south of India by about 14%. So that directly has an impact. Fish in India is a $50 billion industry, yet 90% of the fishermen are below the poverty level. So it just shows how much through middlemen is being consumed. And if you're able to deliver value directly to the fishermen, it has a huge, huge change. So that's one example. Through our business incubator, CE Creates, we have launched a sustainable transport vertical where we're launching services across the mobility spectrum, from electric bikes and scooters to electric cars. So all the Teslas you ride on Careem are owned and operated by us in a joint venture with Careem out here in the UAE. We have we've launched an industrial workwear solution where we've developed more heat-resistant and tech sensor-powered workwear for labor. Laborers work out here in 50 degrees scorching heat. The productivity levels are really low. The durability of the workwear or the overalls they wear is really pathetic. So what we've developed is more durable, more heat resistant, which has shown through a lot of studies, and we've deployed them across our businesses, are increasing the productivity, and we're able to measure the productivity. So those are a few examples of why, and I don't think it's still, it's hype. I think corporates and businesses have no option but to invest in a socially responsible way and continue and obviously spur the whole impact investment spectrum.
Thank you, Tushar. So what I hear you say is the driving force which makes this sort of wave of social responsible investment different than previous waves is the changing consumer pattern behaviors, the rise of millennials that, you know, attach more importance to this aspect and are much more profound to play a key role in that process. And I think also what I hear you say is the end of the middleman. And I think we've been talking about technology and disruptions and about innovations over the past day or two. The end of the middleman is sort of the driving force behind many of the successful new innovations over the past couple of years, like Airbnb, like even Uber is an example where, you know, the middleman is sort of disappearing and there's a direct connection between the consumer and the producer. I would like to open the floor now. I have more questions, and I'm sure you also have more to say about this topic. But I would also allow the audience to ask questions here, as this topic has received increased attention over the last couple of years. So please raise your hand if you have a question. I think the gentleman in the middle there has a question. Okay, you'll get a microphone. Please state your name and your organization, just one sentence, and ask your question. I'd like to keep it very concise here because there are more people that would like to ask questions. Thank you.
Thank you very much. My name is Thierry Mutombo. I'm from COMESA. COMESA is a common market for Eastern and Southern Africa. It's a regional integration organization. Let me first commend our panelists for all these comments. But what I want to raise here is that it isn't because the investment is done in one sector that is leading to the impact investment. If we look at the education or medical sectors, the education is supposed to be a social itself. But it doesn't happen often. You find investors getting in the sector, but to pay the school fee, the tuition, it's very expensive. And these people, they are making a lot of money out of the education social sector, where they are not paying many taxes. Medical, it's the same. You find the investment in medical sectors. The common population cannot accede to the treatment because they are making a lot of profits. I want the panel to discuss on real impact investment, because the impact is not on the side of investment or investor. It should be on the side of the people, the environment in which they are operating. In mining sector, when we talk about corporate social responsibility, this is a provision in many mining sector. It doesn't really explain how the investment is impacting the life of people. We should do more about it. You find that many companies in mining, they are building schools. But what are the status of those schools? They build the small medical centers for the community. But what are the status? How to accede to those services? Philippe talked about principles. We have accessibility, affordability. This is very critical. Technology and financing. How the majority of people can accede and get satisfied of what you are providing in terms of service. I think this is where we should put focus on how we impact the lives of people, we impact the environment, and we impact, the community. Thank you very much.
Thank you. Thank you for, there's actually a number of questions in these comments. Shainoor, you raise your hands. Please address briefly. I would like to give more people the floor to answer questions. And then Philippe, you can answer the second part of the question. Thank you.
I think you raise an important point, and so I think it's all around the expertise of analyzing the market and addressing the target segment that need access, affordability, and so forth. If I can perhaps talk about an emerging market example, in my last company in Afghanistan, we set up the largest telecoms company that represents 6% of the GDP, created 40,000 jobs, 1,200 employees, with 20% of them being women, and created a variety of healthcare, financial inclusion, market prices for farmers, etc. I think it's the way that you look at your investment and design it. And I agree totally that it's not about just the investor, it's about the impact on the ground that you can bring. And that involves influencing government, influencing other partners, etc. And I think that what we are seeing in this point in time is that we are now at the cusp of the SDGs. We're in the last 10 years, and globally, we are not going to achieve those trends. Just as Tushar said that, there is a new market-led change in the consumer, there is also a change in the investor. There are younger people that are becoming millionaires and billionaires who want to invest their money in a different way. There are women investors coming in, and there's this advent of social enterprises that are now designed to basically take away all those vertical silos and bring the base of the pyramid into the formal economy. So I think that, there is this trend towards impact investing. I think there is an element of education that needs to come around the execution and structuring, and then there's a bit of education required around sort of investors so that they can make the critical choices of which type of investment is better.
Thank you, Shainoor. Jean-Philippe, please.
Yes, very briefly, and thank you for the question, because, at Bamboo, we've been spending 12 years trying to reach the last mile customer, right, with affordable services and products. And when I say that technology is playing a big role today in the massification, in the scalability of impact, I'll give you just 3 examples of companies we see realizing what you just talked about. In the access to clean energy, and specifically solar energy in off-grid markets. I mean, we all know that the grid is not going to extend to those regions that are not densely populated in rural areas, and doesn't make sense to extend that grid. But today you have remote solutions through GSM connection to actually, install batteries and very sophisticated actually, systems down to the last mile customer at a price point of about $7 or $8 per month, which is actually the price that those households were spending on kerosene burning. So just one data point, right? Affordability of access to clean solar energy in remote markets in off-grid areas, yes, it's possible at a very low price point, and we can massify that across Asia and Africa big time. Second example, financial services. I mean, there has been a lot of discussion about for the past 20 years about microfinance and financial inclusion. right? But this has been, I mean, I've been one of the proponents of that for 20 years. And this remained quite costly for the end borrower, for the micro entrepreneur. Now, technology comes in big time today in different formats. Big data, artificial intelligence, and intelligent credit scoring systems that are reducing by 80–90% the operating cost of those microfinance technologies and microfinance institutions, with a decreasing interest rate priced on the last mile customer. That's a fact. That's happening today, and we're investing in those fintech. That's amazing, right? Another example is the P2P platforms, disintermediation. We talked about a lot about that, and it's only going to accelerate going forward. Blockchain is secure, decentralized, and transparent P2P transaction. We are disintermediating banks, and the future is all about that. And last point on the healthcare sector. You now have point-of-care technologies that are so efficient, so high quality, and so low cost that we can see or dream of reaching, primary healthcare of quality to the last mile patient, the last mile family, as a reality today. So just 3 examples of where technology plays in to make affordable and accessible things that in the past were just not possible. Thank you.
Thank you, Jean-Philippe. We have time for another question, please. I see a number of hands. The gentleman here, please.
I think I have the microphone already. And as a woman, I think I have an advantage. Thank you.
Okay, sorry.
I'm over here.
There's very strong lights here, so we can't really see the full audio. You're at the back there, I see.
Sure.
Yeah. Okay, thank you. Please address your question very briefly. We only have a few minutes left, so be very brief. One question, and
I
please.
won't be intimidated by your introduction, but I will be brief in my question.
Yes.
My name's Judy Nwakedi, and I come from a company called Seed Venture Capital, SEED. I really like your examples in fishing and then merging with millennials and Gen Z. So my question really is around food security. And if you could share examples of what you're doing in that space. We are here talking about the 4th industrial revolution, and in terms of what it's doing to cultivation, agriculture, agri-processing, there are tremendous negative outcomes thereof. So if you could share the examples that you may have in terms of how you've improved production in food security, and more importantly, as healthcare, as the infant mortality and maternal morbidity shifts in the world and populations live longer, the current view is that we'll be moving from animal-based proteins to plant-based protein. I'd really welcome your comments, your examples, and what you're doing in those spaces. Thank you.
Thank you. Tushar, you can answer this question. Just the gentleman here, then we take that as a last question, so we take the 2 questions at the same time. Can you please, because I already gave you the floor as well. Just briefly, please.
Sure. This is Andre. We have a company called Arab Millionaire, which is gamifying the act of giving. So we have a gaming platform where people can win, and at the same time there's a donation for charities. My question is the line between the poor and the rich, all these social responsibility we're talking about across the world. I see the line where the poor are getting poorer, and the countries that are relatively poor almost have no chance in this competitive world. So my question is, what can the investment community do to reduce this line? The best example was the fishermen increasing their income by 14%. That was affecting the life of hundreds of thousands of people. So I'm just wondering, what can we do over the next 10, 20 years to reduce this line and give everybody a chance?
Okay, thank you. I think that's a very holistic question, and I'm sure, Tushar, if you maybe you can provide one more example. We have 1 more minute of that successful implementation that you had through the fishermen in India, please.
Right. So, I mean, that's obviously a very broad and deep topic on its own in terms of food security, but just extending the example on the fishing company that we've invested in. Their business model is obviously based on fish, and as you know, marine life is depleting, so they've gone beyond that to vertically integrate. They've piloted fish farming projects across the south of India, and are really involving the fishermen again in that, in order to, I mean, fishing is obviously, so fish farming and actually getting the feed for cultivating fish farms is an extremely, again, technology hasn't even touched that space. There's a huge amount of inefficiency. So they're working with the fishermen to get that knowledge base in order to how to improve the efficiencies within that and cultivate farms in order to vertically integrate and protect the source of their business. So that's one example. And of course, plant-based proteins and food, there's been a lot of development and technological advancement in that space. And, you know, from companies like Impossible Foods and all of these companies which are cropping up, it really is going to define the next 50 years of food security on how you can use natural plant-based proteins to develop high-protein food going forward. So it's an extremely important and space which is going to.
Yeah, I've been, sorry, I have to apologize. I've been pushed many times now with science, 5-0 minutes. So we don't have any time anymore. I'm sorry, apologies for that. I'm sure the panelists will be here at the conference, so you can talk with them individually. I would really like to thank the panelists for their excellent contribution to this panel. So thank you for the audience. Let's get our hand together for the panelists. Thank you.